Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius Anucauskas. Today's the 25th of September, 2023. So, welcome, everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest and I'll be back in a bit. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. So guys, feel free to visit us here. If you have any questions, you can always reach out to us. So now then, let's jump into the charts. So in general, after a busy week last week, yesterday was quite a busy week in terms of central bank news, central bank interest rate decisions. This week will be a little bit on the calm side, I would say. So the economic calendar does not. Okay, we do have quite important data coming out. Yes, of course, don't get me wrong. But let's go slowly, step by step on this one. And first of all, let's pick up on Nikkei. So Nikkei did rebound a little bit here. However, as you can see, it's struggling from the technical perspective. It's struggling with the 50-day EMA. It's kind of struggling to get back above it. Okay, look, the week has just started, so maybe we'll get that push back up here. But as I said to you before, last week, I said that if we do drop back below the 50-day EMA, I'll aim for the 100-day EMA, which provided fantastic support. That's great. Now my question is, given that we had a bit of a rebound here, we are struggling with that 50-day EMA. In order for me to go a little bit to the upside and let's say not something drastically here, just going to the upside towards maybe back towards that 33,000 mark or this downside resistance line drawn from the high of the 16th of June, then yes, I need to see a pop at least above that 50-day EMA in order to consider that option. Now, in terms of the downside, yes, a drop below the 100-day EMA would be ideal for me in order to consider, let's say, lower levels. So maybe this little retracement right now, we're seeing this as a temporary correction before another possible leg of selling. But again, let's not rush into anything. For now, let's keep an eye on that 100-day EMA. In terms of economic data from Japan, look, there is only a few things that are coming out. Let me just jump into Japan. Actually, you know what? No, I'm going to keep all of them here. Japan. I think it was only on Friday that we have something here. No, the Thursday foreign bond stock investment. Okay, that's not something interesting. 2-year auction. Okay. I think it's Friday when we're gonna get the industrial production. Yep, there we go. So first we're gonna get the Tokyo CPI numbers, the core and the headline. That's something to keep in mind. Then of course we get the unemployment number here. As you can see, expectation is for a decline a little bit. Okay, we'll wait and see for that one. The industrial production, this is what's going to be very interesting to see. Currently, the expectation is for a slight increase, but will that be the case? We'll have to wait and see because, okay, it's still in negative territory, basically, but it's like an improvement within the negative territory. So, okay, that's, like I said, this is something to keep in mind. Retail sales, of course, that's something to keep, also to monitor. And, of course, the housing numbers from Japan as well. That's, and together with the consumer confidence. So basically, in a way, it's Friday that's going to be a little bit more on the interesting side here for Japan. So in a way, we could see Nikkei kind of moving after the European and the US indices, because those have data coming out like during the week, in the middle of the week, and the beginning of the week. So, but I'll get to that in a bit. So, so that's Nikkei, China 50 index. Look, this one finally gave me something here because I was talking about this. I said to you that if we do break this downside line and we pop above the 12,721 territory, I'll get a little bit more excited with the upside. Well, we got that break and we got that pop. However, as you can see today, we're drifting back below this territory. Now, these are the futures that I'm looking at. So basically, let's see how Europe and the US trade today, because maybe this will be able to stay above this downside line. I'm not getting rid of it yet. I mean, it got violated two times already, so to the upside and to the downside. But if by any chance we stay above this today, so basically creating a false breakout back to the downside here, then yes, there is a chance for this one to drift back up here. However, as you can see here, my level here is playing out nicely. So this 12,720 territory is something that I'm keeping an eye on in order to go a little bit to the upside. ASX 200, Australia. Look, Australia does have a few pieces of data. Let me just remind myself very quickly. So, okay, so Monday, nothing much. Australia conference in RBA conference on inflation. That's something to keep in mind potentially. However, maybe not going to carry. Okay, monthly CPI indicator. That's something to keep in mind. Yes, there we go. That's coming out on Wednesday. Yep. Let me just yeah. So that's the kind of the weighted mean CPI number. Okay. Look, at the moment the expectation is for an increase, right? Okay, that's fine. That's okay, but then it's going to be quite interesting to see what's going to happen with the interest rate. Look, it's not the official CPI figure, don't get me wrong, but something that the Australian Central Bank, the Reserve Bank of Australia could keep an eye on, because again, look, at the moment, the interest rates, they kind of held the same level for the past kind of few meetings, as I can see here. Yep. So from July, I think it went from July, something like that. So if somehow we start seeing inflation crawling up a little bit again, maybe they will be, going for a bit of a hike, maybe going for a little bit of a rate hike. Yes. But of course, my question remains the same. Will they actually go for that hike, or they actually will follow all the central banks that happened kind of last week? So yeah, I mean, their interest rate decision, I think, is on the 3rd of October. Yes, 3rd of October. So basically, like I said, my question is, will they actually go with hand in hand with other central banks, which, like last week when they did not go for any hikes? So yes, so that's my kind of question. Or actually, will they be the actually, you know what, we don't care about anybody else, we're just gonna go with it, and because our inflation is still not where we want it to be, because it's currently sitting at 6%. This is, like I said, this is not the official inflation number, but again, something for you to keep in mind, because again, maybe Australia will be the one that actually, you know what, let's go for another hike. But we'll see. Of course, for now, what we can see here is a little bit of a correction, and in general, look, after we found good support near that 7,000 territory, we rebounded, pushed back up, and what I said to you last week, look, maybe this is a nice bearish flag forming here. So if that's the case, well, okay, that's absolutely fine. Don't get me wrong. I mean, we could see some more downside, but for some more downside, I would probably like to see a drop below this territory, below the 7,040 zone. If I get that, great. Potentially more sellers could join in. So let's keep that in mind. For the upside, look, I talked about the 7,106 zone. I said to you that as long as we stay above it, then there is a chance for this one to move higher. Well, I would say this way, as long as we remain above the 7,106 zone, then yes, I will maybe consider a bit of a larger correction here to the upside. And I previously looked at these levels here, but I think that I need to look at something around here. Let me just grab a magnet here. There we go. Let's put this on. Just bear with me one moment. So yeah, look, this is something that I'm watching here, the 7,150 zone. I get it. It might not carry maybe much significance. However, I want to keep it on the chart. I want to see if this will do something. I mean, will it actually provide some sort of a resistance? So yes, that's what I'm going to be aiming for now, as long as we stay above the 7,106 zone. If we start drifting back below it, okay, maybe we'll start considering the downside. But again, at this point, like I said, it's we're seeing some retracement. Let's see my favorite Fibonacci. Let's see what's happening here. We need to extend it a little bit to the right. There we go. So we did already the 50%. So actually, there we go. Beautiful, beautiful coincidence. The 61.8 is actually near those two levels that I just talked about, the 7, or in general, near the 7,150 zone. So fantastic, good potential target. Let's wait and see. Let me get rid of the Fibonacci for now. So, Dow Jones Industrial Average, and before I go further, as always, good morning to everyone. Good morning, everyone in the chat room and whoever is joining in. I hope you're all having a wonderful start of Monday, guys. So, looking at the picture here, so everything is working out so far good, because I said too that if we do break these two trend lines, the upside ones, then yes, I will consider some lower levels. My next target will be this area near the 200-day EMA, and to be honest, I will take that as a success, because look, previously we did also aim for the 200-day EMA. It did come very close, and then reverse and push higher. So at this point, look, I think that it's kind of reasonable to say that mission accomplished. Now let's see what's going to happen further. At this point, I think that what I would like to see here is a drop below the 200-day EMA. If we get that drop, great. More sellers could join in, and we could see a push. Towards that 33,860 or 800 level here. So that's my game plan for the downside. For the, let me just put this on the chart here. So for this territory, yes, this is what I'm going to aim for, this 33,800 zone, if we do drop below the 200-day EMA. For the upside, I need to see a push, I think, back above this upside line, because at the same time we could climb back above the 50-day EMA. In general, above all of the EMAs here on my daily chart. And then yes, I know that we might be missing out on a little bit of a territory here, but to be honest, I'd rather be safe than sorry. The S&P 500. So in general, in terms of the US news, in terms of what's happening from the US, there is a bunch of data. Yes. Today, we do have the Dallas Fed Manufacturing Index, something maybe you like to look at. Chicago Fed National Activity Index as well. So again, a few bits of data that could be moving. However, I don't think that it will be something very market driving, like a market driving force. Tomorrow, now that's where, yes, we will start looking at data, good data, building permits. That's what's happening in the U.S. House Price Index, something to keep in mind as well. Very important data. CB consumer confidence. Now, this is, yes, that's something to keep in mind as well. I mean, as you can see, it's expected to drop a little bit, and together with the home sales, that's interesting as well. In a way, maybe that's a good thing, because look, the Fed kind of wants that, right? They want to see lower inflation, but that means that they need to kind of reduce, customer spending a little bit, because if you're, and housing prices are also, and housing, like new home sales, are also a good indicator to see what's happening with inflation, because if people still continue to buy houses, that means that they're happy, that everything's fine, they can afford, and blah, 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 right? But the Fed doesn't want that. So, not admittedly, of course, not officially admitting that, but yeah, we need, if you want to lower inflation, right, you need to kind of hit the consumer. That's pretty much straightforward. You need to kind of lower consumer spending. You need to, or at least a little bit, for a little bit. However, not too much, because then you can slow down the economy, and then the economy could, stop. So that's why you're always in this balance. You need to kind of play the game carefully. in order not to kind of create too much panic, right? There is panic, but I think that it's like controlled panic. So yeah, so that's just, like I said, this is what we're going to be looking at on Tuesday. Wednesday from the US, we do get the durable goods. Yep, that's something. Core durable goods, yeah, of course, that's something to keep in mind. So at the moment, there for the core durable goods, the expectation is for a bit of a decline. But the yes, the headline durable goods are expected to improve a little bit. So let's see, of course, let's see. Yes, of course, then we'll have the crude oil inventories coming out. This one right there, the crude stocks change. So yeah, that's going to be interesting to see what's going to happen there. Of course, oil remains quite an important topic so far, with the price kind of, bouncing around, like trading around that 90 zone. But I'll get to oil in a bit. Yes, going further, we from the US on Thursday, we do get the core PCE. Was it? Is it Thursday? Wait, the 28th. 28th and yes, 29th. Yeah, so sorry. On Thursday, we're gonna get the pending home sales, but of course, wait, is it not on Friday that the PCEs are coming out? Let me just double check. Right. Okay. Yes. Yeah. Friday the PCs are coming in. So on Thursday we're gonna get the GDP numbers from the US. Now that's, yes, something to keep in mind. Of course, it might create that nice volatility for traders. Maybe this is actually when more action we could see more action on Thursday and on Friday. But yeah, look, GDP numbers are quite important. And it says the Fed Chair Powell speech. Well, okay, I don't know how is that true or not, but we'll wait and see. Yeah, maybe actually, yeah, he is speaking late in the evening. Okay, that's fine. So something also to keep in mind, guys, if you're trading late. So at the close of the U.S. session, I think that this is, yeah, that's when Jerome Powell will have its speech. And as I said on Friday, PCE numbers, yes, of course. This is what Jerome Powell will be watching on Friday. The PCE figures, because it's the beloved measure of inflation for the Fed, because it kind of it better reflects changes to consumer spending such as selecting substitute goods due to price changes. That's the kind of the official, and it covers a broader range of spending. So that's the kind of the official wording for this. But yeah, of course, look, PCE right now is expected to come out a little bit on the higher side, especially I'm talking about the headline ones. Yes, what's happening there? Let me just double check very quickly. So yes, the PCE, the core PCE. Now the core PCE, where is it? I don't have it here. Okay, so the core PCE is expected also. Is expected actually to the month-on-month one is expected to remain the same, but the year-on-year one is expected to decline a little bit. Okay, that's interesting. So basically, they're all kind of everything's pointing to higher energy prices, and that's why we know that the core number does not include food and energy prices. So that's the most volatile, and that's the most that is higher right now. But again, look, if somehow all the actual numbers beat the forecast and come out higher, well, this could push the Fed back into this kind of raising rates atmosphere, But what I think that what could happen is that, and I already said that before, that this number here, I mean, the next meeting is on the 1st of November. So this number could kind of stabilize to 50-50 basically at some point, maybe running up to the 1st of November. But then maybe they will just keep the rate the same and do the last hike in December. But again, that's only my speculation. Let's wait and see, guys. Daredevil Dave, good morning. Good morning to you too. I can see you there in the chat room. I hope you're having a wonderful start of Monday, and I hope you had a beautiful weekend. I hope everybody else who started, have a beautiful start of Monday and had a beautiful weekend. So yeah, guys, look. Coming back to this situation here, so my idea worked out nicely. We broke the upside line and we traveled lower. We broke the 100-day EMA. We traveled towards this 4,350 zone. So I would say mission accomplished. So now I need to adjust this. I think that no longer needed. This no longer needed. And now what we are left with is this whole territory right there. Let me just grab a highlighter and highlight this zone right there. Yeah, it doesn't, something maybe around this. Let me just, yeah, there we go. I prefer this one. So look, if we do fall and stay below the 4,350 territory, this will confirm a forthcoming lower low, potentially attracting more sellers into the game. If you're looking for some higher levels, I think in my case here, I would actually prefer to wait for a push above the 100-day EMA at least. Then I'll aim for the 50-day EMA. If that gets cleared, great. I will go for a larger correction to the upside, because don't forget that we are still below this downside line. So any kind of pullback here is classed as a temporary correction before another possible leg of selling. But again, oh, Hellork, good morning. Good morning to you too. I can see you there in the chat room. So thank you for joining in. Thank you for joining in everybody else who's joining in. So, you know, I hope you're gonna find this useful. Okay, so another thing here, just me trying to go ahead of my game here and basically look, maybe we'll have ourselves a nice descending triangle pattern. But again, I get it, too early to talk about that. So maybe actually just go slowly, step by step. Maybe it's not going to go for a, you know, for a descending triangle pattern idea. Maybe we're going to go for something else. But that's why I'm just giving you these potential ideas here, potential kind of breakout levels in order to not rush. Try to take a conservative approach and just a calm approach and just go from there. Astral Rascal, good morning. Happy that you caught the stream again. I'm really happy for that. So I hope you're gonna get something out of it, you know, at least. You know, I hope you're gonna find this useful. But look, in general, my videos are not for you to kind of, you know, base your decisions on. No, you just watch me, kind of, you know, you see what I'm doing, and then apply my maybe like a few idea tips or something like that to your analysis, right? This is the whole point of this video. So I'm not telling you to kind of, you know, oh, you need to go sell here, buy there, or something like that. No, that's not the point here, because in general, no one knows. And like, no one knows. We can only try to, like, no one knows what's going to happen with the market. We can only try to apply some sort of common sense, some logic. And this is where, like, you try to get ideas. Maybe you've missed something. Maybe, you know, you're going to capture something interesting here and there. And that's the whole point. Because, like I said, if somebody tells you that, oh, I have the holy grail, you know, in terms of how to trade, yeah, maybe your accuracy is quite good and you're doing something well in this. So, but in general, if somebody says, I really know what's going to happen, no, nobody knows what's going to happen. You just need some sort of a nice number, economic number, data number that's going to screw up the whole analysis. You know, it comes out, boom, there we go. How could you know that? Like, you could not, you know. So only Goldman Sachs and Morgan Stanley knows what's going to happen further. Anyway, NASDAQ 100. So yes, looking at the picture here, beautiful trading activity, I would say. So in general, mission accomplished. Again, I reached my target. Didn't really reach exactly the upside line, but that's fine. We came very close to it. So now my question is, can we see like this something? Because in general, I think that the reason why I'm kind of leaning a little bit towards some higher levels, and again, I might be wrong, but my logic is this: that if we are, you know, if the Fed is expected to raise rates, and maybe the market will say, you know what, let's adjust to that again, because every single time when we see interest rates going higher, right, the market, oh, it's bad, but then somehow it still doesn't fall off the cliff. it still doesn't drift too much to the downside. It corrects a little bit lower and then pushes back up. So it means that the market keeps on adjusting. So you keep on adjusting to kind of shitty conditions, and you keep on adjusting to that, and then you're just going higher slowly, right? Maybe not radically to the upside, but slowly. So what it means, that given that we know that, like I said, the Fed will increase rates, or is expected to increase rates by the end of this year. I don't know if it's going to happen during the November meeting, but maybe it's going to happen during the December meeting. So, and maybe the market actually knows that too. So what does that mean? That means it seems like maybe traders will say, hey, you know what? Let's have the last dance, right? Before like we see another increase, and they will push the market back up. So again, that's only an idea. That's only a theory. I don't know if it's going to happen or not, but let's wait and see. I would say at this point, look, I'm just watching this territory here, this upside line. If we get a rebound, yes, I will consider a move back towards the 50-day EMA initially, towards that 15,000 kind of what's that, 223, approximately around there. Yes, so that's going to be my next good target. For the downside, well, pretty straightforward, to be honest. There's not much to say. I need to see a drop somewhere below this upside line, and then yes, of course, we'll have this little obstacle on the way lower, and then we'll aim for that 200-day EMA. That's going to be my game plan for the downside. The German index, DAX. Okay, Germany, right. You need to watch this one. This is going to be interesting. First of all, let me just, before jumping into the calendar, so the technical situation here is this, as follows. So we found good, strong support near this 15,600 zone. These are the futures, by the way, that I'm looking at. So maybe you're looking at the cash index. It's a little bit maybe different, but still close enough. So look, we're still trading below this downside line, the steep downside line. Okay, somebody might say, hey, the downside scenario is not off the table. Fine, absolutely. The only thing is that I need to see a drop below that 15,600 territory in order to go lower. Then, of course, we have another little obstacle. Well, 200-day EMA. But if that gets cleared, okay, then the 15,511, that's what I'm watching. This is the lowest point of August of this year. And let me just double check something. I mean, it's not the lowest point of this year. No, it's somewhere around here. Let me just park the number. There we go. That's the lowest point of this year, 13,955. Again, very tempting to see a move lower because in general, look, we are near a very, very important area of support, as you can see right here, guys. So something like this, yes, something like this is to be watched. So maybe a little bit lower like that. There we go. This is quite an important area where we are right now. So if we clear that one, then okay, this is where, yes, potentially more sellers could join in. And look at this, we clear the 200-day EMA as well. Boom, fantastic. It opens the door towards that 15,000 mark. Then it clears that one. It goes further south. Okay, of course I get it. Let's not get too pessimistic about all this. But in general, we should not exclude that because in general, since July, the end of July, we're not actually creating, a higher high. We're going for well, at least it seems we're creating lower highs. Actually, we're not going for a lower low yet, but we're creating lower highs. So that for me is a little bit of a problem, let's say, in terms of examining the upside. But again, don't get me wrong. Short-term pushes to the upside could still happen, and that's quite possible. So in a way, I would say that if we do, from the short-term perspective, if we do break this steep downside line, then yes, I'll consider a move back towards the 100 and the 50-day EMAs. That's going to be my next target. That's something around the 15,880 zone, approximately around there. Or maybe even actually a little bit lower, 15,850, let's put it this way. That's going to be the next good target, and then we will take it from there. I think I need to, put this somewhere around here. And then we'll just kind of take it from there, yes. Because, look, in general, this week, in terms of economic data releases, we do have quite a busy one for Germany and a little bit for the European Union and for the Eurozone in general. So let me just show you what I'm talking about. So first of all, today, 11, according to your time, and basically have a look at the IFO business climate information. I mean, the forecast is for a little bit of a decline. If somehow the actual number comes out even below that forecast, I mean, this is not good for Germany. In general, Germany's data is a little bit something to wish for, like, better. Or actually, can I say like this? No, I cannot say like that. No, it's basically something that you wish that it could be better. However, or they could wish that it could be better. But at the moment, it's not happening. I think that I think Europe is a little bit of in a pickle. But of course, everybody is there. Everything is connected. So if one is in a pickle, then everybody's like in the same jar. So. IFO business climate, something to keep an eye on today for Germany. Lagarde speech today. I don't know how much it will affect the market, but you can keep an eye on it. However, I think that we're going to go further into Wednesday. I think, yes, Wednesday, that's when GfK consumer confidence is going to come out. At the moment, the forecast is that for the same minus 25.5 number. Oh, look, okay, that's fine. Or should I say not very fine, but still, if somehow it comes out even below that, guys, honestly, this little fella here could fall off the cliff. But again, let's not rush. Let's wait and see. Now, then the Eurozone, there's not much stuff happening with the Eurozone. Thursday, that's when it's going to be interesting. Thursday, we do get the CPI numbers from Deutschland, and yes, from different different Bundes region, and yes, of course, something that we will be keeping an eye on. There we go. That's the one that I was kind of searching for: a harmonized inflation rate and inflation rate. So these are preliminary numbers. Don't forget that these are not final; these are preliminary numbers. However, they can give a good glance and how the final one can shape up. So with the German numbers, it kind of tends to almost match. There is not much deviation from the final ones and the preliminary ones. But again, nothing is final, nothing is for sure, nothing is guaranteed. So let's keep an eye on this first, the German inflation numbers. And then, yes, of course, we will keep a close eye on the retail sales, sorry, not the import, retail sales from Germany on Friday, together with the unemployment numbers as well, as you can see. So basically, Germany is something to be watched this week. And in a way, also, you will be able to watch the euro dollar, but I'll get to that this is going to be my last one in this section. So I need to still go through the FTSE 100. FTSE 100 is also something that I'm keeping a close eye on. Look, okay, in terms of the structure here, the technical picture, look, I talked about this last week. I said to you that I'm keeping an eye on that 7,700 zone. Yes, we violated it a few times, but somehow it is still oscillating around it, and actually this is coming in line nicely with my other scenario. I've talked about this one, and that's the potential idea of a bullish flag. So as you can see here, we have ourselves a nice pull, we have ourselves a little correction to the downside, and what does that mean? That means a nice little bullish flag, potentially. However, look, we still need that confirmation break. So in general, at this point, if you are a little bit on the risky side, then yes, okay, you can keep an eye on this 7,700 zone and say that as long as we remain above it, we could still go higher. But if you're a little bit more on the careful side, then 7,800 zone is something that I'm going to be keeping a close eye on, because I need to see a nice good pop above that barrier in order to go higher. So at this point, yep, that's what I'm going to be doing so far. And if I get that pop, then yes, potentially more buyers could join in. So let's grab one of the highlighted zones right here, and let's reuse it right there. We can recycle it. Always recycle, guys. There's a hidden message for you there. US dollar, there we go. Okay, this is something that I'm also keeping a close eye on, because again, yes, we do have the PCE numbers, as I told you already, the US ones. So we are currently stuck here, and in general, it seems like the index does want to go higher, but I think that it's reasonable to say that in order to go to the upside, a pop above this 105.44 territory is required in order to go higher. So that's what I'm going to do. That's what I'm going to wait for, and you know what? if somebody doesn't like that, well, tough luck, you know. So I rather wait and, you know, rather wait and for this one to make a move, then kind of, you know, get caught out somewhere. Let's say if it can still also collapse to the downside here. We just need some good data to come out, and yes, like for example, we could see the, you know, Eurozone inflation numbers. I get it, it's the US dollar, but you know, still it could have its effect because the US dollar index doesn't take into account the euro in it. So okay, so you know, that's why just kind of keep that in mind. But yeah, mainly it's the US data we're going to be keeping a close eye on, and there is a good amount of data coming out from the US this week, so just monitor that. Look, today it might stay the same like this. Maybe Tuesday could give a little bit of a move, but probably is going to start shifting somewhere, maybe starting maybe on Wednesday or something. Or actually, let me just double check on Tuesday, September 26th. Okay, Tuesday, yes, consumer confidence and new home sales. So maybe actually could start shifting somewhere on Tuesday, but let's not rush into this. Let's wait and see. Gold is still stuck, but at least it's doing something within that stuck territory, because look, for me it's stuck because it's stuck between these two trend lines, and we're still drifting lower here. That's fine, but what I said to you last week, I said to you that if we do drop below this 1924 zone somewhere, yes, I will aim to the downside. Initially I'll target, although my arrow here is all the way towards this upside line, that's my ideal scenario, but initially I'm going to target the 200-day EMA and this 1914 zone right there, which provided fantastic support recently. So that's going to be my simplistic approach here on gold. If by any chance we pop above this downside line, great, I will go to the upside. Silver is looking at the yeah, it's okay. So this one is a little bit of a pain in the bottom, because I talked about this when I said to you that, look, if we do pop above this 200-day EMA, I'll aim for these two 150-day EMAs, and now we're kind of just oscillating around it. So to be honest, the upside scenario is not off the table. It's still, there is a good chance for this one to drift higher. And in general, if you remember, I talked about this idea of a triangle pattern. So far, it seems to be working out. So yeah, we're rebounded recently from the lower side of this triangle, and we're pushing back. It seems like we're pushing back towards the upper side of that triangle. Let's wait and see. So, but again, like I said, on the upside, my next target is this downside line. So, oil is beautiful. Oil is beautiful because it's currently trading nicely above my 90.10 zone. I talked about this one last week. There we go. Beautiful. So, basically, I said to you that as long as we remain above that territory, I will continue targeting the upside. Well, to be honest, I'm going to stick to my game plan, and I'm going to just do that as long as we stay above the 90.10 zone. If we start falling back below it, I'll take a neutral stand, because I need to see, for my downside scenario, I need to see a drop somewhere below this this 80. Let's put it this way, below this 88 zone. If we do fall below the 88 zone, great, I'll consider a larger correction to the downside. Soybeans. Soybeans. The situation here is this, that look, so far it's working out. I talked about this last week. I told you that as long as we remain below the 1319 zone, yes, I will continue targeting the downside. So as long as we remain below this territory, I'll continue targeting the downside, because we cleared quite an important area of support. We then retested it from the other side. So let me just put this one right there. So we retested it from the other side, and yes, there we go. We're drifting nicely to the downside. I said to you, then my next target is the 1294 territory, and if that gets cleared, then is the 1270 zone that I will be targeting. So far, it seems to be on the right track. That's the lowest point of May, by the way, this 1270 zone, and then we'll take it from there. Oh, and by the way, this is the lowest point of this year. Let's see if we can reach that. Wheat, also near a key support zone. So yeah, look, I'll stick to my game plan. The same analysis is still valid. So 573 territory, that's what I'm looking at in order to go lower. And if I get a clearance of that one, then I will target this little hurdle, the low of the 16th of September of 2020 near the 533. Yep, that's the one, roughly around there. And then if that gets cleared, then of course we will be aiming for that psychological 500 zone. In order to consider some upside moves here, I would, at this point, I think I would need to see, now maybe not this highlighted zone right there, actually, but maybe I would need to see a push somewhere above this territory right there, this downside line, and then yes, we could go a little bit higher. So BCH USD cryptos, let's jump into some of those. Okay, honestly, with this one, not much is happening, so I'm still waiting. So while it remains inside this territory, I'm just observing the price action. For the upside, I need to see a push above the 225 territory. For the downside, a break of this upside line is required. That's it. That's my simplistic approach on cryptos, and on BCH USD, on Bitcoin Cash. Ethereum, so far so good. I talked about this. I said to you that if we do fall below that 1600 zone, yes, I'm aiming lower. My next target is the 1528, 29 zone, something like that. And then we'll take it from there. The only thing is that in terms of aiming for this target, this is where I need to kind of, I think, say something against myself, is maybe, just maybe, we could see a hold up somewhere around here near this upside line. So, yeah, I mean, let's put it this way. Let's target this hurdle, for this upside line first, and then we'll, if that gets cleared, okay, great, I'll aim for that 1529 zone. Let's jump into a few pairs. AUDJPY. So far, so I want to say so good, but it's actually a little bit on the annoying side. So, but in general, we're kind of stuck in this territory. Yes, we had a violation here, but it kind of quickly pushed back inside this. So, you know what? I think that maybe this highlight zone needs to go. I think it's better to redraw something here. So maybe capture this little low, the 94.54 zone. So if you're looking for some lower levels, wait for a drop below that hurdle and below this one right there. And then, yes, we will go from there, because at the same time, we will break this upside line right here, drawn from the low of the 24th of March. But for the upside, I'll take a conservative approach here, and I'll wait for 95.86 level being broken in order to go to the upside. And not only a break I need to see here, I need to see also at the body of the daily candle staying above that area. AUDNZD. So this one so far so good as well. I talked about this previously. I said to you that if we do fall below this upside line and we fall below the all these EMAs here, then yes, I will go further south, and so far it's doing a very nice job here. This 1.0815 level is providing good resistance, and yes, so far I can say that I am aiming for this 1.0779. If that gets cleared, my next target is this 1.0729 zone, and then we will take it from there, because don't forget that we are in a range here so far. NZDUSD. So NZDUSD is also stuck here a little bit. I talked about this. So basically, the same analysis is valid. I'm not going to spend too much time on this one, because I talked about this one last week, and I said to you that in order for me to consider the next short-term directional move, a clear break here is required. So it needs to break of this downside line drawn from the high of the 8th of August, because it currently coincides nicely with my 50-day EMA. And if that gets cleared, my next target is the 100-day EMA and then the 200-day EMA. For the downside, a break of this upside line is required, and then we could take it from there. CHF JPY, one of my favorite ones. So I call it the battle of the safe havens. So what's happening here? You can see that we're getting a hold up near this upside line. So yeah, if you're looking for some lower levels, guys, I need to see a break of that of this upside line. This highlighted zone, you know what? Although I know that it's got violated, but you know what, let's remove it. Let's just keep this level, the 164 zone, which is providing that resistance so far. So yes, there is a chance for this one to drift lower, but I need that confirmation break below this upside line drawn from, well, it's not an ideal upside line, to be honest, but I've drawn it this way. So I think it's probably, I'm very biased on this one. Don't get me wrong. I mean, maybe you should have drawn it actually this way, you know, so something like that. So maybe that could actually be a little, make more sense. So you know what? Let's stick to technical analysis, right? So yes, I mean, we can keep an eye on this upside line drawn from the low of the what's the 20th of June 2023. Yeah, if we get a nice clearance of that one, then yes, I will aim for that 100-day EMA and that 161.30 zone. CAD CHF, so this one continues to rally, as you can see here. So yes, we climbed above the 200-day EMA and stayed above it. So yes, in a way, the buyers could still continue driving this one. And to be honest, I think that we are not far from these levels, so you know what, might as well. These are the highest points of June here, so of this year, so good potential target here. But again, let's not rush into things. For the downside, a drop below the 200-day EMA is required here in order to go lower. And yes, then I will aim for the 100-day EMA. USDJPY, this one is, so now it's getting a hold up here. Okay, so previously it was getting a hold up near something like around there, 147.90. Now it's getting a hold up here near this 148.46. Okay, look, I'm still aiming for that 148.85, and to be honest, I don't expect this pair to have like maybe, you know, strong moves to the upside here unless the data will drive it and we'll see a nice explosion. But if that's the case, you know what, then I'm keeping a very, very close eye on the Bank of Japan, because it might be jumping in with its intervention and yep, trying to stabilize the yen and trying to bring it back, well, bring it back to life, let's put it this way. Let's make it a little bit stronger against its major counterparts. So at this point, yeah, I am, like I said, I'm slowly aiming to the upside. My next target is the 148.85, but given that if, let's say, by any chance we pop because of some of the data that's going to come out this week, some of the US data that's going to come out this week, so then, like I said, be careful, and maybe we could see a nice reversal back down because of the Bank of Japan. So, but again, to be a little bit more on the careful side, let's say a drop below the 147.50 territory is required. US dollar against the Canadian dollar, so far it's holding below that 1.35 zone and below the EMAs. So yes, I'm still monitoring this scenario here, this idea, and if we continue to trade, yeah, basically that's the same. If we continue to trade below that 1.35 zone, I'm going to lean towards the downside. In terms of, by the way, in terms of Canadian numbers, we do have something. Let me just, I think it's GDP figures that are coming out from Canada. Let me just refresh my memory, see if you have business barometer, average weekly earnings coming out, yes, on Thursday and on Friday. Let me just double check this very quickly. Canada budget balance. Okay, where did I see this? I mean, just a sec. Preliminary GDP numbers on Friday. Is that correct? Yeah, I think it's the preliminary numbers. Ah, there we go. They're just in front of me. So yeah, GDP numbers coming out. So the month-on-month, final month-on-month figure is expected to increase, but there's no forecast for the preliminary figure. Okay. But wait. This is not something is wrong here with that economic calendar. Yeah. Okay. So one figure, I know it's all fine. So one figure is for the preliminary current number, the other one, the month, and the other one is for July. Okay. So this one is for July. Yep, and this one is not sure yet. Okay, so this one is for August. Okay, let's of course, like I said, let's wait and see for this. I mean, we could see some action here, but if we do pop and stay above the 1.35 territory right here, I'm going to consider a move back to the upside. Simple as that. USDCHF, so far so good. I'm not going to say anything else here. We're on the right track. We're pushing higher. My next target is the 0.9148 zone right there. In order for me to consider consider the downside. A drop below this 0.90, I think, yeah, 0.90 territory would be required. GBPUSD. So we do have an interesting week for the pound too. We do have the I think the GDP numbers are coming out. When is that? When is that? That's on Friday, I think. No, let me just double check this. Yeah, Friday. Where's that? Friday, October. This is Friday. So we do have the Britain's GDP numbers coming out. There we go. Yes. So the forecast is for an improvement. Business investment is also coming out. So this is going to be quite interesting. Of course, keep your eyes on that. So far, look, we're on the right track. My next target was this 1.22 zone, and I'm still aiming for that one. I'm not gonna drag this one. If it goes a little bit lower, that's fine, absolutely. But at this point, I'm just aiming for that 1.22 territory, and then I'll take it from there, guys. For the upside, I need to see this one pushing at least back above the 1.2308 zone, somewhere around this highlighted zone. If I get that, then yes, I will consider a larger correction here to the upside. EURCHF, beautiful test of this downside line. I talked about this last week, so in a way, mission accomplished here. Now I'm watching this carefully, this downside line. If that gets cleared, yes, I'm leaning towards the upside, and I'm aiming for that 200-day EMA, or maybe this other downside resistance line drawn from the high of the 13th of January, and then we'll take it from there. Euro for the downside, by the way, for the downside on this one, if you're looking for some lower levels, probably the better option is just to wait for a drop somewhere below the 0.96 territory right there, because at the same time we could actually break this steep upside line. So in a way, let's say by the time this could drift lower, let's say, maybe this could play out nicely together. But again, that's the downside scenario. For now, I'm kind of leaning a little bit more towards higher levels. EURNZD, beautiful test of my upside line. There we go. If you remember, on EURNZD, I had a bunch of trend lines. I had previously also this one right here, and then I said to you that if this gets broken, I'll go towards this upside line. The other one, the second steeper one. So now I got rid of this one. Now this one became the steepest one. I said to you that if this gets cleared, I'll go for this other steepest trend line, upside support line. We reached that perfectly, so I can get rid of this steeper one, the steepest one. Now this becomes the steepest one. And now my question is, can we go actually further south? Well, for that, I need to see a break of this upside line, which is drawn from the low of the 13th of December. If I get that, great. I'll go towards that 200-day EMA, or even maybe lower here. But look, maybe at some point we could see a bit of a retracement here right now. Maybe a move back up here towards this downside line, which is also the upper side of the falling channel here that I have still on my chart. Look, we have violated it here, but maybe it still could be a nice one. So long story short, if we are looking for some higher levels, then there is still a good potential for that one, because as long as we remain above this lower side of the falling channel and above this upside line here drawn from the low of the 13th of December of 2022, then yes, there is a possibility to see a bit of a retracement. If we somehow clear this territory right here, this one right there, and then yes, I will aim for the downside. EURGBP very quickly. So we reached my target. So yes, the upper side of the potential range idea, which I've mentioned last week. So now if we do retrace back down, yes, this would be a nice, beautiful range for me. If I'm looking at some higher levels here, let's say if we do clear this and stay above this, then, well, ideally I would like to see a move, a move towards this zone right here somewhere, 0.8760, and then we will take it from there. EURJPY, we are stuck in a range, so yes, I need to see a clearance through one of the sides here. Same analysis is still valid. So either push above the 158.53 zone for the upside, or drop below the 156.87, and then I'll take it from there. And finally, EURUSD, guys. So EURUSD is still balancing above this 1.0635 territory. I spoke about that. In order for me to go lower, I need to see a nice, good, clear drop, and not only a false breakout like we had last week. I would need to see the body of the daily candle staying below that area. If I get that, then yes, I will go lower. I will go towards that 1.06 territory and maybe even the 1.0550. But let's not rush into things. For the upside, a break of this downside line drawn from the high of the 18th of July is required. And then, yes, I will consider a move to the upside. So that's my game plan. I need to see a break of this downside line in order to consider a move higher. So that's it for this session, guys. I hope you found it useful, and I'll have to wrap it up here. I need to make way for my colleagues and here on TradingView. So, to use TradingView, you know. So, yeah. Look, thank you very much for watching and listening. I really appreciate your time, guys. Your views, your rocket ships, your everything, your comments. That really helps me, and really appreciate that. So, you know, and everybody else who tuned in. And everybody else who's going to be watching this as a recorded session later on, thank you for doing that. Really, like I said, it really helps me. So I hope you found this useful. Thank you very much. Don't forget to have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Daredevil Dave, thank you very much for the thumbs up. And yes, everything will be fine. And I'll see you tomorrow, 6 o'clock GMT time. Bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.